We're live now. You can start.
Great. Thank you, Maria. Hello, everyone. Firstly, happy Monday. And secondly, I want to say thank you for all your time on a busy Monday to be on our VCTV. Welcome, everyone, to Venture Capital TV from La Token, where we connect startups and investors and founders under one roof. So the topic of discussion today is going to be around fintech and blockchain and the investments that goes into that during the time of pandemic. Those of you who do not know me, myself, Sunny Mohanty, I'm the regional director of La Token, based here in Singapore. Welcome, everyone. So today we have more speakers, which I'm really, happy about. I really want this to be a very engaging session with a lot of information sharing as well. So today we have the new speakers who would like to start with Mike Seitz, Ravi Kausik, and Basil Mofta. Hi, hello. Welcome to VCTV.
Hello.
Hi. So I would like you to start with a short introduction about yourself, the company you represent, and what you do. And after that, we would go and take some questions from each of you. Mike, please start with a short intro about yourself. Thank you.
Thank you so much for having me on today. This is really exciting to be with the others as well. So I appreciate that time. Mike Seitz, part of Dragon's Vault as a general partner and also CEO of Back Office Consortium, which is an extension of that fund and really geared towards enabling and creating activity with the startup and entrepreneurial environment. And so we're targeting and trying to find opportunities to facilitate success amongst entrepreneurs, particularly serial entrepreneurs. And so that's the objective of Back Office Consortium, is to provide infrastructure support from accounting, marketing, IT, and those aspects so that they can succeed more successfully and improve the chances of success, so that those who do invest in their ventures will have a better opportunity for return. And Dragon's Vault is geared towards also creating that opportunity to extend a chance for them to have a cash reserve as well as an investment opportunity for them to succeed in their entrepreneurial venture. So we're looking at targeting into cryptos as a primary asset, as well as direct investments into ventures. And that's kind of where we're at right now.
Excellent. Thank you, Mike, for that really quick, short intro. Next, I'd like to speak to Basil. Basil, is it Basil? Basil, sorry. Just want to make sure I pronounce your name correctly.
No problem at all. It's Basil Mofta. So my name is Basil. I'm the general partner for Global Ventures, which is a venture capital fund that has offices in Abu Dhabi, Dubai, Riyadh, Jeddah, and Cairo. So we invest across the Middle East and Africa region. We're a typical Series A investor, so we look at businesses that have sort of passed the seed stage and sort of starting to scale. Product market, let's say, is at least achieved, even if it's temporarily in a particular geography. And our aim as Global Ventures is to help them expand into new markets, expand into new maybe customer segments, or in the rare occasion, some new product segments. But by and large, it's a fund that's been around for the last 3 years here in the region, and lately been, doing more and more investments across the entire Middle East and Africa.
Excellent, awesome. Welcome, Basil, to VCTV. So next speaker we have Ravi. Ravi, please introduce yourself because you're on the first time on the show.
Yeah, my name is Ravi Kaushik. I'm a partner with a venture capital firm called Waterbridge Ventures. We're based in Delhi, India. We are a classical early stage venture capital firm, invest in the seed to Series A space, sector agnostic, tech only. We launched the fund about 4.5 years ago. We're now investing out of our second fund. And we've invested close to 25 companies over the last couple of funds. And we are sector agnostic, but focus on India. So that's sort of who we are.
Excellent. Welcome, Ravi, to VCTV.
Thank you. Thank you.
Next, we have our speaker who we've already spoken to once on our show, Sushma. Hi, Sushma, back. happy to have you on our VC TV again. So
hi, today, thanks so much for having me again.
So we are discussing a different topic today. So for those who do not know you, kindly introduce yourself.
Sure. I'm Sushma Kaushik. I'm a partner at a India-based VC fund called Avishkar Capital. We are a sector-agnostic fund which focuses largely in financial services, fintech, and sustainable agriculture. We've been around for over 2 decades now and have slowly moved out our focus outside of India to include South Asia as well as Africa. So we have different funds for those geographies as well, but continuing to focus on these 2 main sectors. And we've done about 60 odd investments, completed about 31 odd exits. So we've been around a long time.
Great, good to know that. Welcome again, Sushma. We're going to hear more from you later. Last but not least, Praneet. Hi, welcome again. How are you?
Thanks, Sunny. Doing pretty well, and thanks again for having me on this panel. So pleasure to kind of meet you all again. And as a quick intro, so I'm based with the investment team at Consensus, and what we are is basically an early stage fund focused on backing founders and companies in the blockchain space, and generally looking to kind of provide them financing and support to ensure that they can scale and but with them scale the Web3 ecosystem at large. And as part of what we do, I think we've made about 30 plus equity positions. We manage 30 plus equity positions in about 15 to 20 token positions and actively in that regard. And we're generally thrilled to kind of be supporting the way the blockchain system kind of evolves into a new, should we say, financial system, if one might call it that. So happy to kind of be on this panel for speaking about the same.
So if I heard you correctly, Praneet, you invest in equity as well as token. Am I correct? Okay, great. Awesome. Thank you. I just want to make sure I heard correctly. Thank you. Okay, I'd like to ask the new speakers, the new people on the panel today about the recent investments. So Basil, hi. So want to know, because you cover Middle East and Africa, so would like to know, what are your recent investments in fintech or blockchain or crypto, if any? Just give us an overview of your recent investments. Thank you. Are you mute?
I'm so sorry. Thanks for catching that. I think that's a common mistake. Now, listen, we've been very active over the last 6 months. We've done, I think it's about 6 deals, so one per month, which doesn't mean that we started all those deals this year. Many of them started last year, but with the process, the due diligence and everything else, getting a company prepared for Series A is not a simple task, right? There's a lot of work to be done because there's obviously expectations about the scale and so on. We very much like the fintech space. We recently invested in Egypt in a company called Paymob. Paymob is in the acceptance business, credit card acceptance, both online and through POSs. They are an aggregator of SME players, if you want. So they have about 5,000 plus merchants on their network today and growing quite rapidly. They also run the digital wallet for Vodafone in Egypt. This is a hot sector. One of the companies that's recently IPO'd last year in this space is a company called Fawri in Egypt. You may or may not be familiar with it. And believe it or not, they've just become a unicorn as of last week, where they crossed $1 billion valuation. So it's quite a moment in the industry where the fintechs, especially coming out of North Africa, but also Saudi and UAE, are sort of coming into the maturity stage, as I'd like to call it, or that sort of, they're no longer an experiment or an idea. They're becoming viable businesses that are, generating revenues and profits and so on. We've also recently made 2 health tech investments. The names are not disclosed yet, so I won't share them at this point. But we see health tech having a similar path to fintech. Fintech 10 years ago got regulated or deregulated, whichever way you want to look at it, as a way to sort of overcome the financial collapse of 2008 and for banks to diversify risk and for the regulator to, sort of increase the the inclusiveness of the financial services into the broader community. We think health tech will go through a similar path where, health tech today is really only afforded and available at a good quality in a very small percentage of the population. And health tech, our healthcare providers will equally become decentralized into telemedicine and online providers and remote diagnostics and remote prescription management and all sorts of things that will allow a larger group of the population to become inclusive as well. So those have been our recent sector focus. There's many other things, but I'll stop here. I think that's a good overview.
Oh, great. Awesome to know about Egypt and, investments in Egypt, because you haven't, I think, have had anyone in so far. Okay. Thank you, Basil. Thanks for that. Next, I would like to ask Ravi about your recent investments in last few months.
Sure. I think we've done quite a few. I'll speak about two investments. One is in the edtech space. It's called bitclass.live. So they are building infrastructure for independent teachers to go live for their classes. So if you are a tuition teacher, you're a maths teacher, and you take classes for kids, it could be maths, yoga, whatever, they give you infrastructure to go with less than 5 minutes, and all the elements that is required by a teacher for a classroom experience, which is a class board, obviously your video conferencing, payments, all the modules are required for any teacher to go live. So that was one investment we made, because I think what's happening in India is edtech is really taking off. It has accelerated teachers who are offline to come online by at least 5 years. So that's a massive tailwind. The other investment we have made is called Ilo. It's in the social commerce space. So they are a content community and commerce platform in the health, beauty, and the wellness segments. So think of them as short form content videos, community where people can ask questions about, hey, I have hair fall, I have skin acne, how do I solve it? And you marry all of that with e-commerce. So it's a platform, it's a bunch of ex-Flipkart executives who spent the last 5 years on Flipkart, which is one of India's largest e-commerce portals. So those are two investments that we have made in the last 3 months.
Okay, so these are like what series they are, what stage they are?
These would be seed stage investments.
Oh, okay, that's good to know. Thank you, Ravi. Mike, over to you.
So Dragon's Vault is recently incorporated out of Singapore. So we have a number of term sheets that are out. So we don't have any direct investments that we can share. But our primary investment is in the crypto asset world, particularly with the HUDL commodity, which is a new crypto asset that we find really fascinating and interesting in the way that it kind of pushes against the typical economics of cryptos, as well as we do have some in Axiom as well. But we're the targets that we have right now are really interesting. There's one particularly that's in the HR space that is doing some unique things, again, with crypto being a bounty to pay on a peer-to-peer recruiting mechanism, so that those that are wanting to migrate and extend their employment services from one country to another country, that recruiting process could then be done through a peer-to-peer, where a bounty is set up so that somebody can post that they're looking to migrate and they need visa sponsoring, so that they can actually transition from one place to another place and kind of bypass again. It's again looking at decentralizing that process, right? So trying to remove the middleman of typical employers and some of those fees, and then pay those fees directly on a peer-to-peer basis. So that's an interesting model for us, and so we're looking at investing directly into that particular company. The other one that's really fascinating to us as well is this education technology, where again, particularly here in the US, you're seeing lots of innovative opportunities where education is being turned upside down. There's lots of concerns about going back to the public schools systems, and children going to the schools, and teachers concerned about the COVID pandemic still. And so you're seeing a lot of innovation in terms of bringing that online, but also not just an online education platform, but to really change the model there, where we can use our funds to actually help facilitate an education endowment, so that teachers can be paid a healthy salary, as well as to help facilitate the operational expenditures on the educational side. And then also minimizing the school settings so that kids are getting a 1-to-4 ratio in terms of their education. And then allowing the parents also have an opportunity to invest in the asset as well. So they're co-investors on the fund. And then that gives them an opportunity to actually have a return as their children go through their education as well. So at the end, it's not just, hey, I've got this piece of paper or this degree or diploma, but it's the children can finish their education and the parents can have a potential return on their investment within their own children's education. So it's a really interesting model, and we're really excited about looking at that.
Oh, wow, peer-to-peer recruiting and the education platform that you're, invested into, but the parents can earn as well. That's quite interesting. We'd like to know more about it probably later after other speakers have actually spoken. But excellent, very interesting. Thank you, Mike, for sharing those with our audience today. Next, I would like to ask Sushma about the investments.
Sure, Sonny. So this during the lockdown in the last 3-4 months itself, we've just completed 2 investments. One in the fintech space, in most specifically in the neobanking space, and the other in an agtech space. The agtech I did discuss in the last panel, so I will keep that aside for now. But I'll focus on the neobank. So in India is at a cusp of some very interesting things that are happening, because a few things have all fallen into place at the right time. And we all do recognize that financial inclusion is a big area, and there's significant push as well to ensure that financial services gets included for large parts of the population who are otherwise excluded. So there's this particular neobank that has started targeting just small business owners. We do recognize that small businesses are the ones that drive the economy forward, especially in a country like ours. And these are especially what we call the kirana shops, which are the small mom and pop shops, and providing them financial services and financial products which otherwise were not made available to them. Simple things like current account, inventory management, pocket insurance products, even short-term credit. These are not easy for this particular segment. And so this is a neobank that provides all of that to small business owners.
Okay, so you invested into them in recent times, in last few months?
That's right, just 4 months back.
And what stage were they?
So we typically invest Series A and above. So they were in the Series A stage, yes.
Okay, I mean, you are solving the real problem of the SMEs out there. Thank you, Sushma.
We try.
Yeah, we all try. Thank you, Sushma. Praneet, please enlighten us about your recent investments.
In terms of recent investments, I would say in the fintech space, we actually just closed a small ticket into a company that is pretty much providing fiat on and off ramp services to blockchain developers. So you can think of it as maybe a Stripe for on and off ramps in some regard, and essentially abstracting all of the underlying complexities that one has to deal with when it comes to integrating with different payment processors, and when you basically have customers coming from across the globe looking to interact with your crypto application. But also in the recent past, that is maybe a few months back, I think we're also token holders in Compound, which is basically a decentralized money market protocol, which pretty much took the decentralized finance world by storm when they started announcing their liquidity mining incentives and distributing tokens and enabling the true ownership of the protocol by token holders and by community to kind of govern and vote upon and basically see this as a more sustaining route towards governing a financial ecosystem, so to speak. But I think we're pretty active investors in the broader, I guess, crypto adjacent fintech space. So we're very proud with our investment in BlockFi, which we did. We just announced the Series C 50 million close just a few days back. I think that they're pretty much the only company who I've seen do a Series A, B, and C announcement within 12 months. So they're just growing to the up and to the right at an extremely rapid clip. So yeah, very, very proud to be investors in the same.
Oh, great. I've got a follow-up question on that. I mean, do you invest in fiat equity? All these companies that you invested recently were fiat equity-based investment, or you also invest into the tokens?
So, for instance, with Compound, I think, yeah. So, I mean, we were pretty open across the board. We do realize that in the blockchain space, there are innovations that are kind of being done in terms of the different financing structures that companies and teams are looking to utilize as they kind of think about how the ultimate end, should we say, outcome for the product would be. And so as long as, you know, we have we have an extremely stellar legal team who keeps consulting with the SEC in terms of their purviews and outlooks on token classification, on taxation mechanisms and whatnot. So as long as we kind of get to understand that the team are in fact looking to empower not just themselves, but potentially the community in terms of the way they're thinking about their token distribution, we're happy to kind of invest in tokens and actually help guide teams to design and think about distribution mechanisms to ensure that everyone benefits, so to speak, at the end of the day, and has a piece and has the capability to kind of capture a piece of the pie, so to speak.
Okay, a final question. So do you take part in IOs conducted on exchanges?
I don't think we've done that to date. I think there's I think we're like I said, we kind of come in, we're almost, you can say, the first institutional check-in when it comes to backing early stage teams in some regard. And we've typically seen that founders who wish to interface with us and the ones we want to work with are pretty much at a point where they kind of prefer taking in capital from a smaller pool before actually thinking about launching their product and potentially their protocol to a wider set of users. And so we probably come in at a stage that's slightly earlier than the actual token distribution.
Before going public, okay, on exchange, okay, got it. Okay, thank you, Praneet. Baisal, I have a different question for you. So after the pandemic, I just want to know your insights from Middle East and Africa. So what has changed in terms of institutional and private equity investments, like, you know, because of the COVID-19?
So we're focused on venture capital. So I guess private equity may have a different view or may have different perspective. But if I was to answer your question in the sense of early stage VC investing, I think you could say this was a long time coming, but the reality is there were, you know, the era since WeWork and the sort of debacle IPO, we've seen a lot more conservatism about, you know, cash burn and how companies grow their business. The kind of healthy growing and unhealthy growth, if you want, has become a lot more focused. The pandemic probably just made that even more sharply understood across the entire spectrum of technology. Doesn't matter what stage you were at. Sometimes there was always an excuse that once you got to later stages, you're growing and you need to burn. But even there, pressure has been put by the investors, the investment community, to be a lot more conservative. The age of sort of gross margin negative businesses is definitely under a lot of pressure at this point. I think there's a lot of people going, you know what, I'll just stick with the positive gross margin, and you need to show me a shorter path to profitability. So this whole area of how you manage, if you want, your cash and your money. The other thing that I think interestingly has come up is about service levels. So if you're investing in anything that's consumer facing, consumers, well, you saw probably a rapid increase in usage. So e-commerce, delivery, food, you know, pharmacy, logistics, all that stuff sort of saw a nice uptick, anywhere between 10 and 300, and I've even seen 1,000% growth in a couple of companies just because consumers are all been forced to go online. And a lot of that is going to stay. But the tolerance for customers for bad service is becoming, very little, if you like. So customers expect you to deliver on time, to deliver the product that you requested, to deliver what it is that you said you were going to deliver. Or if it's an online service like a fintech, they expect it to work and to do what it needs to do. No more tolerance for mistakes. It's kind of like we said with the age of the internet, this was 20 years ago, switching costs for people going online was going to get lower, right? At the end of the day, a supermarket next to your house used to benefit from all the houses around it. Now, with the age of the sort of e-commerce coming on board, what you're seeing is that it doesn't matter where the supermarket is, right? I don't care. I care that what I order is the best price and is delivered on time to the service level that I want. And I think businesses to survive are going to have to invest in much better service levels in order to be successful going forward.
A very good point, Basil. Very good point. Thank you so much for sharing those with our audience. Thank you. Mike, please help me understand a bit about the decentralized pension fund that you have and how you are helping startups with that. Thank you.
Yeah, so this is an exciting venture for us to kind of take on. And again, all around the ecosystem, like Basil was saying, really looking at how can we actually improve the health of the startup, right? Versus letting them kind of run on their own. And so it's kind of two-sided to aspect of this. One side is we do have the pension plan as well, the decentralized pension plan that enables entrepreneurs to have an opportunity to have an extended cash flow, as well as reserves and emergency reserves. And so we can actually set this fund up in a number of different ways. And as we're looking at different opportunities, we're actually exposed to newer, innovative ways that we might be able to kind of collaborate in that capacity. But ultimately, it's to give them an opportunity to extend their burn rate. And then on the other side, it's also providing an infrastructure and a platform, because you do need a technology platform on one side to be able to facilitate this whole process. And so the objective there is on the infrastructure side is to be able to have a little bit better insight and a platform that allows each entrepreneur, as they come onto the platform, to have a little bit more stability in their cash flow, have more stability in the way they operate their business. Again, all to kind of bring down the risk of them failing and to try to improve that. On the pension side, it's really interesting to watch this because of the crypto worlds. We're seeing a lot of interesting things from different countries, right? For example, in France, you have France just recently acknowledging that cryptos can be is considered a consumer loan, so loans that are against crypto assets. But then you have also kind of the opposite effect there in India, where they're banning cryptos. And so you've got some interesting things that are happening in that kind of economic space, with countries trying to figure out what do you do with the cryptos. But there's still a lot of really interesting crypto assets. For example, the huddle commodity, which is again the primary asset that we're looking at. It doesn't move down. It's a crypto that has stability to it, and so we like that kind of aspect. And because of that stability, we feel like we can create this pension plan that can provide a long-term investment opportunity for serial entrepreneurs to place their investments and their own equity into a situation that they can extend their entrepreneur careers. And so again, we want to decentralize it, right? We want to remove the middleman, keep costs down, and then facilitate that opportunity for others to be more successful in that space. And so we're excited about what will happen with this as we move forward with it.
Yeah, very innovative, very, very new, very concept. Like, obviously DeFi is decentralized finance is new, but on top of that, these kind of startups that you're looking to invest, I mean, excellent. Thank you so much, Mike, for those insights. Next I have Ravi. Ravi, I have got a different question for you. It's different from Mike as well, obviously. So have you come across a portfolio company of yours that recently pivoted because of the pandemic? Like they were struggling, but they were very smart and they managed to move quickly and survive into something else.
Yeah, I think it's a great question, and I think I can think of several examples, or maybe this one might be most easier for folks to understand. So we had an investment in a fintech company called Let's MD. They were doing patient financing. So let's say you are a patient who go to a hospital and you have a surgery that's coming up. They give you a loan for that surgery, and the product is a 0% finance, which means that the patient doesn't have to pay any interest. It's a 9 or 12-month EMI, and the interest component is actually paid for by the hospital. Right? The hospital now makes sure that the patient actually gets surgery done in the hospital. With the pandemic that's come in, hospitals were closed. All elective surgeries effectively stopped. People stopped visiting hospitals because what it meant is that there wasn't enough footfall, and hence there weren't enough patients to give loans to. So what they did was then they started getting into ancillary adjacent areas. And one adjacent area was... Sorry?
Which areas? I missed it.
Yeah, I'm coming to that. So what they did was pharma companies, so think of a pharma company who's selling an expensive cancer care, right? This is a 3-year program, incredibly expensive, right? Now, what pharma companies do is they give an upfront discount to patients. And this discount is a very arbitrary number, right? They have no way to decide if a patient gets 30% discount, 40% discount. It's very random. Now, because they knew how to assess patients, their ability to repay, the ability to find ways to repay the loan, what they told pharma companies is, we will give you an AI-driven algorithm which will help you accurately determine how much discounts to give patients. If there's a cancer care for a patient, should you give them 30% discount, 40% discount? And what that did was, it not only reduced the amount of discounts pharma companies gave, but also increased their conversion by at least 30%. So if the pharma company was converting 30% of patients before, post this AI-driven algorithm, they're now converting at least 40-45 patients to their treatment plan. Right? So this is an example of an adjacent area where one of our portfolios was able to use that existing knowledge and depth and transition into an adjacent opportunity to grow. And now they have 9 of the 10 top pharma companies in the country who are their customers.
Wow, excellent. We love to hear these success stories, startups pivoting during the pandemic. Thank you, Ravi, for sharing those insights. Sushma, I've got a different question for you. So what do you see happening in the next few months to come before we end 2020? So what are your plans for this year as a VC? What are your advice to the startups? And what are you looking to invest in the coming months?
Sure. So plans right now is to ensure that all our companies are comfortable, have enough runway, have enough liquidity to last this year. This year clearly was, it threw all of us off, right? I mean, it's not something that anyone could have planned for or was prepared to handle. And different companies have had different types of challenges, whether it was fintech or non-fintech. There have been challenges. It's just that the degree of the challenge has been different. What's keeping us busy is we are doubling down on our existing portfolio companies because clearly the ones that come out of this pandemic stronger are the ones who are going to be the larger winners, right? So we are trying to support those companies that are going to emerge stronger in this situation. We continue to, look at opportunities, opportunistically to see how things will unfold. I don't know if you've been following financial services as a sector in India. And I think Ravi did touch upon the fact that we've given a 6-month moratorium, so people need not repay their EMIs in this period. And so we are all eagerly waiting to see how things will unfold once that comes to an end. We want to see how small businesses quickly get back on their feet because in an Indian context, the lockdowns have been longer than in other countries. And so many of the startups have been struggling. Many sectors have been struggling. People's employments have been at risk. So we need to see whether we'll be able to come back and land on our feet. And so that's largely where most of our time is going. And we're hoping that 2021 will be rewritten in a better way.
We all do. Trust me. Thank you, Sushma. Thank you. Thank you to know your roadmap for this year. Thank you so much. Okay, next, I would like to have a question very much specific to what Praneeth represents. Hi, Praneeth. So, for instance, you have an investor in your network, and probably he is thinking to invest into a crypto asset. So, how would you help that investor explain the benefits of investing into a crypto? Because you do invest in crypto. So, Praneeth, over to you.
Yes, that is a question that we kind of have been grappling with from quite some time. I would say there's some components that are a little that make it a little resistant to fundamental analysis, as one might kind of see it, because I guess fundamental analysis typically works when you have a period of time when you where you can kind of have a look at things that actually pertain to the growth of the underlying asset or the services that you spawn off on top of it, and that is still not yet the case in the broader blockchain space. I think a lot of it kind of has to deal with very community driven and potentially a very mimetic culture, if one might call it that. But in some aspects, I think the things that I would basically ask someone to evaluate would primarily be focused on the notion of what this means to the community that it is empowering, in terms of why the community feels so strongly about having ownership in this particular kind of asset class, what they and having a look at what exactly they end up doing with the same in terms of their holding periods, in terms of in terms of the persistent liquidity that one might associate with the same, and also understanding related to that the notion of why this asset could potentially, I guess, I mean, the classification of this asset itself, in terms of what exactly it entails as it functions in the crypto ecosystem, be it as a store of value, which you can basically utilize as a basis to potentially beat in inflationary pressures, or as a basis to help coordinate the community to perform useful functions on the network, and using that as a basis for evaluating the underlying value that this ecosystem would manage to capture at a whole in some regard. And so that's something that I would basically ask anyone to look at. But outside of that, the most important thing is to generally understand the level of technical expertise that this person has with regards to ownership of assets, because this is something that kind of sets aside the blockchain space and as a whole from other forms of financial assets, where the feeling or the actual act of ownership is something that is very, very empowering, but it also kind of places the onus on you as the owner of that asset to actually kind of take the adequate responsibility to ensure that you're holding it safely, storing it securely, or putting it to use across different blockchain protocols in some aspect, as well as the level of risk tolerance and the holding period that one would typically associate with that. And so that is a decision that generally ties into the way you're kind of doing portfolio management and how much of your portfolio you basically want to allocate towards this particular asset class. But I mean, those are a few of the considerations that I would basically have anyone have a close look at before kind of taking a stance and dipping their toes in the crypto asset space, if one might call it that.
Praneeth, you've done a great job in answering that. Thank you so much. I really liked it. Thank you so much. The next question I have for Basil. What are the VC investment process best practices that you can share today?
From a startup point of view or from a fund point of view?
From a fund point of view, please.
Well, best practices, there's quite a bit, but maybe if we're trying to sort of talk about some of the latest things or the latest trends, I mean, listen, most VCs will say that they, conduct the commercial and financial due diligence themselves, and that they outsource sort of legal, tax, and anything else to third-party providers. There's been a lot of discussions lately around in the fintech space, kind of who's best to due diligence, because you've got a whole bunch of moving parts, whether it relates to the scaling, maybe some of the debt that they need to take on board to be able to scale or leverage their business model to a wider set of audience. And I think some of the things we're seeing is to bring in financial advisors quite early. For us at Global Ventures, we mitigate a lot of that through actually getting to know the entrepreneurs early. So we spend a lot of time in both the fintech and health tech space, getting to know entrepreneurs at the seed stage, just listening to their story, listening what they're trying to do, and then monitoring their progress. Because if you get to know people early and you see how they progress, it's not to say they can't pivot. Of course they can, but it's interesting to see how they overcome challenges along the way. That's what gives us reassurance around, are they a resilient team? And no matter what type of challenges they get or what type of circumstances, they'll be able to handle. One of the other things is we always have more than one partner look at a deal. So, we switch out partners kind of halfway through the deal, if you like, and have someone else continue the process, because it allows you to sort of see if any assumptions or biases were made in the way that process was brought on or the way the company was brought on early. Sometimes, a friend of a friend or somebody you trust, or maybe somebody that you just have a little bit more of a chemistry with, that you sort of like let go on certain topics. Another partner or a different person will be able to bring in a different perspective. So we do a little bit of the switcheroo kind of thing halfway through the process to allow someone new to get close to the founder, but also allows us as a firm to have multiple perspectives on a deal. Those are some of the recent best practices. I don't know if that fully answers the question, but gives you an idea of kind of new things.
That definitely does, Basil. Definitely does. Thank you so much for sharing those insights. Really helpful. I would like to ask Ravi the same question, but best practices from a startup point of view, like, in terms of investments.
Sure. I think it's a good question. And I think for all the startups and aspiring founders who aim to raise venture capital out there, I think the first one that I would mention is, I think one of the things that we look for in founders is what we call as founder market fit, or the horses for courses approach. What I mean by that is this founder the right fit for what he or she is doing, right? And too often times you see founders who start a company because it's fashionable or it's exciting or that segment is getting a lot of capital, right? But one of the things that we assess is the founder doing it for the right reasons and there's the right motivations for it. The second one is definitely to do with the opportunity cost, right? What is the founder giving up to start this company, right? And is that a big opportunity cost for the founder? Because look, most founders that typically we back are obviously high achievers. They do very well in life. They're very smart. They speak very well, and they probably can get some of the best jobs available out there. So that is very critical. And we rarely invest in founders who come to me and tell me that, I'm currently in this job, but if you fund me, then I'll quit the job. Right? That never works. I think the third one is founders should never ever send cold emails to VCs. I think that rarely works because in our order of things, we get so many emails on a daily basis that I have to prioritize. I always prioritize emails that comes from people I know, warm introductions, etc., over cold emails. So another thing that we test is, does the founder have the hustle to get connected to somebody in the VC industry, right, for raising capital? And that shows the founder's hustle, his ability to network and find us where he needs to get to. It's a very critical aspect of a founder as he starts to scale a startup. And I think finally, we look for what we call as founder's ability to scale up. What I mean by that is a founder who raises seed capital evolves into a founder who raises Series A from someone like Sushma or Basil, right? And what we assess is, does the founder have the ability to scale up in terms of his thought process, his ability to attract high quality talent, his ability to sell a story, and the ability to sell a vision. And some of the things that we assess, someone like Basil assesses of his ability from Series A to a Series C level scale. Can he do that? So for founders who think of raising venture capital, I think some of these things would help them sort of tailor make their thoughts and their pitches when they approach VCs.
Very key points. Thank you, Ravi, for sharing those. Sushma, would you like to add something to these questions? The best practices.
Best practices for VC funds to follow, right?
Yes.
So I think most of them have already been touched upon, whether it comes to ensuring good quality due diligence beyond the obvious that is already being done, and also on the sourcing bit. But also another important thing that VC funds need to do, and it's gaining a lot more prominence, is in the corporate governance, right? Not just for the VC fund ourselves, that we are at the end of the day managing someone else's money. So we should ensure that we maintain the highest standards of governance within the fund itself, as well as ensure that our investee companies also follow good quality governance. This becomes the gold standards in investing going forward. So that's something even we focus on to ensure that we are very transparent, our processes are documented very well, without being too burdensome, and so that nobody can lift a finger and ask us on how we conduct our business.
Great addition, Sushma. Thank you so much for sharing that. Mike, I have got a question. I mean, you are obviously not a VC firm, so I've got a question. What are your roadmap for this year? Because I know that you obviously registered entity in Singapore. So what are your, sort of for the next 6 months for this year? What are your roadmap? What are your plans? What are your objectives and goals? If you can just share.
Thanks for that. Yeah, we've got a number of different objectives that we want to try to achieve over the next little while here. One of those is that we want to target some entrepreneurs and to try to invest $500,000 into potentially 5 new entrepreneurs into the decentralized pension plan program. But we're also very much bullish on the ed tech space. I think that's a really interesting space for us, as well as we're taking a hard look at the gaming tech space as well. It's interesting how in the gaming space, there's a lot of activity and there's a bit more of an appetite in terms of taking on tokens like Praneeth was talking about. How do you get somebody to invest in crypto assets or into that space? There's already communities that we feel that are already existing that have kind of that appetite or that mentality, and the gaming space is one of those opportunities I think that we can help facilitate, and so we're going to look at heavy in that area. I think the biotech, as Basil was talking about, was that there's in the medtech and the bio space, I think will continue to be well. But overall, we're going to continue to look at diversifying our crypto assets as a whole. And it will be interesting to see what will happen in the global economies, because you have these mixes between state governments and federal governments actually beginning to dip their toes in this space and explore the blockchain infrastructure, as well as creating their own crypto assets. And so some of them have been moving in that direction. Even large financial institutions such as Citibank has already kind of moved in those directions. And so it'll be interesting for us to kind of monitor that area and what will happen with the appetite as a whole. I think because the pandemic and the volatility that we've experienced in the fiat currencies right now, and especially where governments are trying to inject so much bailout money, it's creating so much inflation in those areas that more and more investors, as well as individuals and even to the startup level, are looking for safe havens to look at exploring to kind of balance and hedge out their investments. And I think with our decentralized pension plan that we're pushing forward, so I guess the biggest objective for us is to continue to proselyte this opportunity and to allow others to see that there is some stability that you can find in the crypto world. It's not all just volatile. That you can find some stability and you can find long-term growth objectives as well as there. And so those would be the things that we're going to be kind of monitoring and watching, but we want to be very, very aggressive over the next 6 months or so in terms of continue to bolster the community that we have within the decentralized pension world.
Great. Thanks for sharing that roadmap with us, Mike. Excellent. Thank you. I've got a question for Praneet. Praneet, I mean, with your experience and knowledge, what do you think will lead to mass adoption and trust of crypto?
I would say, so there's a couple of things that maybe tie into this question. And the first is around this notion of agency and ownership. I think people are getting to a point where they want to move beyond a simple transactional experience, which is what you typically experience with any, say, fintech application or anything that you normally do as part of your day-to-day life, which is facilitated by other intermediaries, and you kind of treat that as something that you do, as opposed to something that you're more engaged with, something that you can communicate and have a say in. And so the act of this ownership in a community-based model is something that is something that is very appealing to, I guess, a newer generation of people as they think about managing value and about transacting value and what they actually communicate about the same. And so it's essentially what we're kind of seeing is this melding of social and fintech that is pretty much at the forefront of anything that we're typically seeing in the crypto space today. And so this primitive of I guess ownership and engagement is something that is facilitating a lot of like new interactions that were probably not possible maybe just even a few months back, if one might call it that. And so I think that is essentially kind of powering an almost grassroots movement to kind of get more people involved and kind of get them to understand how this can be empowering, not just to I guess to the creators of this ecosystem, but also to the people who participate in the same. But outside of that, I think there is obviously regulation that is stepping in, and in many cases in the better direction. For instance, and as Mike mentioned, I think the French government, for instance, has basically been I think they've granted one of the portfolio companies the first virtual asset service provider license, which basically enables them to go out to end users and retail customers at the end of the day and offer them alternative investment products and alternative, should we say, areas or avenues to kind of explore and diversify their holdings and enable them to kind of tap into this new phenomenon that we're typically seeing with digital value chains and digital assets as a whole. And so more regulation is something that we obviously welcome, and I think that is something that would be incredibly helpful for communities to kind of grasp and for state participants to kind of endorse and kind of get more people on board this bandwagon, if one might call it that.
Yeah, very valid points. I was expecting those points, regulations, and obviously big banks entering into the space obviously brings in more trust. Thank you, Praneet, for those insights. Basil, I've got a question for you. So because you talk to many startups and founders on a daily basis, so what have you seen that has really surprised you, or pleasantly surprised you, the emerging products in the space after the pandemic, like because of this coronavirus close down, a startup had a great idea and you were like, oh, this is fantastic, this is going to fly.
By the nature of investing, lots of ideas are interesting, and it's a question of figuring out the sectors. It's a question of figuring out the risks associated to competition, market conditions, regulation, and all that stuff. So, one of the areas that has been talked about in the past, but maybe the pandemic has really put into focus, is the future of work. And the future of work is a very big title. It's obviously been used a lot lately in a lot of reports and research, but it refers to how will the world around us change, given that we're all much more comfortable, whether it's children or it's school, and whether it's young adults entering the work, the work, and entering the work life, if you want, or whether it's us kind of older people here, talking on webinars. The end of the day, we're all a lot more comfortable with technology, and therefore the idea that commercial real estate, which used to have a premium value to it, especially top end commercial real estate, maybe that's not as necessary, or at least not in the same quantity, and that it will be replaced with a lot more home office, replaced with a lot more, remote working. I remember I had a friend who was telling me about some, I don't know, society in Indonesia where entrepreneurs go hang out by the beach to build their ideas. And I, that was 5 years ago. And I used to think that's kind of crazy, work is work and play is play. And I guess that world is really changing around us very rapidly now, right? The future of work is also, or future of, let's say, learning and work is probably the better way to put it, is really not just about physical space and virtual, but it's also about how people want to be engaged. So we're seeing a huge surge, and we invested in a company recently called Ogram here in Dubai, which is providing part-time work, meaning people are actually choosing. It used to be supplementary. I have a main job, but I need to make extra money, so I'll take a part-time job next to my main job. Now what's happening is you're seeing people be like, no, you know what? I'm gonna do 3 part-time jobs. I'll work in some places on Monday and Tuesday, some places on Wednesday and Thursday, and some places on Friday and Saturday, let's say. And I'll take 1 day off. But one may be creative. I'm an artist and I like to, or I'm a musician. One is I'm working to make money at a restaurant, or maybe I'm working in a sort of a more regular job, if you want. And another, maybe I'm volunteering at a hospital because I care about elderly people. So people are able to combine different jobs together to make an income and to be very happy with sort of the variety and the diversity. That's also a big trend, especially among the younger generation that we're starting to see. So the future of work is clearly an exciting area. It means a lot of different things, but there's undoubtedly been changed by the recent events, if you want.
I think, Basil, I have to agree to that. Like, having more than one temporary job just to have that security, because times are different. It's better to have more than one. I agree. I mean, this is what the future of work is going to look like. You might have one permanent job, but probably something on the side as well. Thank you, Basil, for that. Sure. So we just brings us to the end of the session. I really want your honest opinion about these sessions that we have. So Ravi, because you joined us for the first time, so what do you think you liked and you didn't like? I mean, you just be open about it so that for the next time we just we're going to be like working on that.
I think what I really liked is that we have a very diverse set of panelists here. It's really exciting, right? To get perspectives from Berlin, from the US, from Middle East, Avishkar in India. I think that's pretty incredible. Sort of what I like, I think it's more curious about, would love to know who our audience is, what these people are listening to us, what's their profile like, and hence, I think that would be interesting because love to hear what they have to say, but I think I'm assuming that there is an audience of people listening to us.
Oh, yes, that's a good point. I mean, we obviously have our people who are monitoring and filtering the comments which is coming from public. We can share that with after this.
Please.
Yeah, sure. Thank you. Good point. Mike, what do you think you like about these sessions, including your closing remarks for the session tonight? What do you like and what you probably didn't like?
Well, I can't say I didn't like anything other than perhaps I had to get up a little extra earlier than normal to be able to accommodate, but that's just the global economy that we live in now, so that's fine. No, I thought this was really great, and I think Ravi hit it right on the nail in terms of the diversity of the panelists. It's just great to kind of get that in the trenches perspective from different parts of the globe. I can sit here in the US and read reports that's happening on the global stage, but it's always better to speak to those that have boots on the ground and to speak with those on the front line and in the trenches, as I like to say, in terms of what's really happening at the forefront of their experience, whether it's from the VC side or from the startup side. It's just real critical to get that in-person conversation. And I think this is a great forum to be able to help facilitate that. But also, like Ravi, I'd love to understand the audience and understand their perspective of what's happening, perhaps maybe in real lifetime, to see what comments are happening. Not that we could respond to those, but it would be nice and interesting to understand who's listening and what kind of activity is happening there. In terms of improvement, I couldn't say at this point here. I'd have to evaluate a little bit more, but I think it's a great, and I really appreciate the way that you handle the panelists, Sunny. You've done a great job.
Thank you, Mike. Thank you. I take that feedback, and I'm going to talk to my production team who are doing a fabulous job supporting me to host this show. Thank you, Mike, for your inputs. Sushma, so, closing remarks, plus I want to ask, what's the difference between speaking at a very large event where there are like 50 speakers on different, you have different forums or different rooms, as opposed to this up close personal few speakers panel? What do you think? What do you like?
In fact, I'm appreciating this format far more than the physical format, because in physical format, there are far too many distractions. In these kind of formats, you do know the people, the audience who are signing up are actually signing up to listen to the discussion that's going on. So, and it's going to be very focused. So that's very good. And the second, I think this is fantastic, where people from a diverse set of people from across the globe who otherwise one wouldn't have the opportunity to interact or exchange notes or to even hear what's happening, what's happening in Cairo. There's no chance for someone like me sitting in Mumbai to get to know, right? And this is a fantastic opportunity for that. And to hear innovations happening at different levels, we kind of get siloed in the things that we do. And this just broadens our perspective to things. So it's fantastic. Thanks so much, Sonia.
Thank you, Sushma. I love to hear your insights from India and investment perspective in the portfolios that you have. Always, it's just very good. Thank you. But Basil, because you're just joined us for the first time, so just tell us how different we are or we are not.
No, that's great. And I do have to hop off to another call very shortly. But again, I just want to say I really enjoyed it. It was fantastic, interesting, always great to hear other people's perspectives. We could always interact more and maybe have one question and have us have a discussion about it. That would be helpful, just to hear multiple points of view. But otherwise, I thought it was really well done and enjoyed it a lot. Thank you for having me, and thanks for organizing this.
Oh, sorry, Basil, if I got it correctly, you want more keynote sessions, did you
No,
say that?
not keynote, more interact, like one question, and we can all kind of debate it amongst each other rather than just have Q&A with you. We can all ask each other questions as well. I think there's some interesting things people are doing that we could ask them about.
Oh, wow, that's a great idea. That's for my next panel, which is tomorrow. Thanks for sharing that with me. Fabulous.
Good. I'm going to have to drop off. Thank you so much for having me, though. I appreciate it.
Okay, take care, Basil. Thanks for your time. So, Praneet, again, what did you like and what didn't like? As Basil mentioned, I think that's a very valid point. We should ask all the speakers to ask a question if they have any question, rather than just me asking. So what's your, Praneet, what's your closing remarks and feedback?
And once again, thanks for helping put this together. And as everyone iterated, I think it's a great opportunity to kind of, I feel at times that I basically have blinders on with a lot of things that typically happen in the blockchain space. And it's incredible to actually get to hear of ecosystems moving beyond and affecting real people's lives and kind of getting and improving the status quo for a much larger subset of people than the ones that we're typically dealing with. And so it's pretty important to kind of have those perspectives, even as an investor, and use those as a basis to kind of shape our thinking moving forward. So yeah, thanks for facilitating this. And I guess, I mean, in one thing and this probably has to do with Basil's remark in some aspect, where I think I was facilitating this panel, which people found apparently the most engaging when the other panelists had should we say differing points of views and actually had the opportunity to kind of debate and expound upon certain topics of discussion in some aspect, which kind of maybe facilitated a deeper dive in some aspects. But again, that is very specific to the kind of audience that you're like catering to, and if that is something that you feel is helpful for the audience to kind of listen in and chip in on, I think that would be great. But otherwise, yeah, this was exceptional. So thank you for that again.
I think, Praneeth, thank you so much for that. I think debate is always very intriguing. I mean, at least I love it. I think in between the panelists, I think we are open to ideas. We are open to ideas. We're open to trying new ideas as well. Because VCTV concept was launched in February, and we are open to ideas from our speakers as well. Thank you so much. Noted down on those feedback. So this brings us to the end of the session today. I would really personally thank each one of you to make it a huge success, in terms of sharing knowledge and insights. You can watch us Monday to Friday at www.latoken.com/events. And we cover variety of we covered food tech last time, but Praneeth, we covered, I think because he's into blockchain and fintech, so we covered that, but we have other topics as well. So please feel free to let us know what is your area of interest, and we could always have you again on our panel. Thank you so much. Have a great evening. Take care.
Take care.
Thank you, guys. Thank you.
Bye everyone. Bye.
Bye.